Hi, everyone. I would like to say a big thank you for joining us here today, and I hope you're excited about the topic that we'll be discussing, which is obviously focused around stablecoin. And I'm extremely fortunate today to be joined by some great speakers. So we actually have Narav from Freemarket, Charles as a partner from CMS, and a dear colleague of mine, Bernie, who is our product director. But let's start with a little bit of a brief introduction into myself and BVNK, and then we can talk a little bit about the agenda of what we'll be speaking about. So my name is Jane McAvoy. I'm a VP of Platform Partnerships at BVNK. I've always been in the fintech space. Very fortunate, I guess you could say. So I've previously worked for Starling Bank, which is a UK challenger bank. And I also worked for TransferWise, the FX provider. But now I'm very happily at BVNK. And if you haven't heard about us before, we are a B2B payments platform. So we're focused on building a multi-rail platform which combines both fiat and blockchain rails to basically move money in the most efficient manner possible. So what are we going to talk about today? So as I mentioned, I'll kick off with a little bit of an overview into stablecoin, talk a little bit about the trends and features that we're seeing today. And then I will invite Narav to join me and we'll talk specifically about Freemarket and their specific use case and what their users are asking them around stablecoin. And then we will also have Charles and Bernie join us for a panel discussion. And then we will actually pass it over to yourselves so you can ask a few questions to our panelists as well. We actually already have some questions already pre-submitted as well, so it's always good to have an engaged audience. And you may see, hopefully, if everything is working correctly, we have a poll that we would love you guys to take part in as well. So I think you'll be able to see it on the right-hand side as well. And we can kind of discuss the findings of that a little bit later. So enough about the agenda. Let's get into the good stuff. So let's talk a little bit about the trends. So we're seeing a number of broader trends and developments that have obviously influenced a high adoption of stablecoin, specifically in the fintech and payments industry. So on the regulatory and government side, we're seeing a lot of the central banks engaging with digital assets themselves, and obviously specifically around CBDCs as well. This is obviously having an impact on the regulation that is forming around stablecoins. So we're seeing a lot of good recognition of the increasingly importance to recognize stablecoin as a legitimate asset. So we've seen a unified framework as well within Europe with the likes of MiCA, and we're starting to see that as well with further developments in the UK. So obviously the impact of the central banks and regulation, this has a positive downstream effect on the industry itself. So we've seen large payment giants like the likes of PayPal actually take it even a step further and launch their very own stablecoin. So that would be able to use across the PayPal ecosystem themselves to be able to move money in the most efficient manner. This definitely increases the stickiness of the PayPal product as well by launching their own stablecoin. And a lot of this is obviously driven by merchant demand as well. So we've seen Visa obviously doing their own test with stablecoin from a settlement perspective with merchants. So they're trialing that with WorldPay and Nueve. We've seen a lot of impact as well from the issuers side as well from a settlement perspective as USDC obviously moves on the likes of blockchain, which can massively increase the settlement times for delivering funds. So it really can have a huge impact on the whole merchant and acquiring side of that payment lifecycle. Oh, excuse me. And then finally, we have seen a lot of partnerships budding from this. So as I mentioned before, there is a lot of regulation and compliance that comes with stablecoin. However, there's a lot of players that are offering an infrastructure layer, which can allow fintechs to basically take advantage of blockchain rails to move money more efficiently while not having to have direct exposure to holding stablecoin themselves. that's actually an example of what BVNK does today, and we can dive a little bit deeper into that. So we've taken a look at some of the trends that you've kind of seen here, but let's actually put some stats behind that. So you can see here, stablecoins are actually the fastest growing digital asset today. And we're all aware that there was obviously a downturn in the overall market in 2022 and the early start of 2023 as well. However, the influence of stablecoin for money movement has continued to increase, and they're really powering the crypto ecosystem themselves. So let's get some more numbers behind this. I definitely had to write this down so I didn't forget or make any mistakes. So there are around 25 million stablecoin wallet addresses on chain today, 5 million active weekly users, and they account for nearly 70% of on-chain transaction volume. So I think that really puts into context where we are seeing the market growing today. And definitely this is driven by the increased regulation and the central bank's involvement. And again, to put this into a bit of a comparison, the $11 trillion worth that was settled on blockchain, that's just less than the total amount that Visa settled in the same year. So that's a direct comparison from one of the largest giants in the payment industry itself. So let's see, as I mentioned, there was a bit of a poll. So what's the main reason your business is interested in stablecoin today? So can we actually see what everybody's thoughts were? I think I actually have to vote and then I can see myself. So 24/7 availability actually came out to be one of the highest and enabling international growth. And I think that's quite prevalent to what we'll be talking about in the panel discussion. So I couldn't be happier with those two results, to be honest. So now that we've kind of taken a little bit of a look at the trends, we're going to talk about some of the key features. So how do they really compare, I guess, to traditional fiat rails today? So I think it really boils down to efficiency. They're available 24/7 and 365 days a year. So that's really key. We know that fiat rails and the local payment rails don't always work over the weekend periods. They also have various different cutoff times, and obviously around the likes of bank holidays as well, they don't work at all. So we don't really come into that problems when we're using the blockchain rails from an availability perspective. Transparency is another really key one. So as they run on blockchain, they are transparent and trackable. So as if we were using a SWIFT payment, you actually only receive the information of the last leg of that payment. Whereas with a stablecoin payment, you can receive a lot more upfront information. This can definitely be a benefit from a compliance perspective as well. And then another one is speed. I think we are definitely living in an on-demand economy. Everybody wants everything instantly, 24/7. I know I do, that's for sure. So they can definitely have a huge impact from a delivery perspective, specifically on and off-ramping functionality. Whereas cross-border and SWIFT, obviously we can see a lot more of a 2 to 5 days to actually deliver that fiat payment from a cross-border perspective. However, we know that they can't win on everything. There is obviously risks that can be involved, and the regulation is definitely still evolving from that perspective. So that is something that we at BVNK believe. It is a multi-railed world that we are entering into. We do not see stablecoin rails or blockchain specifically eliminating fiat rails from a totality perspective. It's more so the combination of the two to deliver payments in the most efficient manner as well. So that's actually a good kind of segue now into sort of the use cases that we've kind of seen from stablecoin itself. So outside of the core crypto sector, we're definitely seeing a lot more payment institutions or regulated EMIs integrating stablecoin into their core value proposition. So let's just take a B2B fintech as an example. They could enable their merchants to actually be able to accept payment in stablecoin and then even be settled in fiat if they wanted to for whatever reason. And then there's sort of the added other value. So instead of being settled in fiat, they could also hold USDC or be it whatever stablecoin of choice in a dedicated balance. So just as we've seen today, a huge amount of the neobanks were all focused on delivering multi-currency accounts. We could get to a world where it's multi-asset. So you see your USDC balance alongside your GBP and your Euro balance, and you initiate payments from either of the balance as you see fit for whatever invoices you would need to pay. So hopefully that gives you a little bit of context of where we've seen the market go to date and some of the key features and trends. But that is a perfect segue now to invite my first guest to the stage, who is Narav, who's the Global Head of Banking Relationships at Freemarket. Narav, great.
Yeah. Hi, Jane. How are you? Good
Yeah,
afternoon.
I'm good, thank you. I'm very glad that I've remembered to click through all of my slides so far. I'll just stop sharing now, actually. So do you want to give a bit of an introduction into yourself?
Yeah, absolutely. So first of all, thank you for inviting me, for this the fantastic conversation. As far as I'm concerned, I represent a company called Freemarket. So we are purely into B2B payments at this moment. We are an authorized payment institution here in the UK as well as in Ireland. As far as I'm concerned, I'm into payments and banking for over 24 years now, and with Freemarket for over a year, where my role is manage the entire banking relationship and also look at the new products. So that's one of the reason I'm here for this discussion today.
Perfect. Way better introduction than I could have done. So great to have you. So let's
Thank
kick
you.
it off then. So what's your take on DLT and how will it change the way that fintechs build today?
A good question, because you anyway covered the potential of stablecoins specifically with the good stats during your presentation. And although it's in the early stage of development, but it has huge potential for many industry. And as far as fintech is concerned, specifically, if we talk about how they can leverage this particular technology, they can offer or probably build a superb, transparent, and efficient financial product and services around that. uh, if we take specifically a cross-border payment as a case here, it can help with this particular technology. It can help not only reduce the cost but also improve the efficiency, because you don't need intermediary banks for if at all you're leveraging this particular payments through cross borders. Sorry, through blue. I'm so sorry for that. Uh, Through blockchain. And again, the one more point which you covered during your presentation is that it will not only help customers winning new customers, but also expand their reach and enter new markets going forward.
Exactly. No, and I couldn't agree more. And I think, as you said, yeah, it is really just the tip of the iceberg of what we're kind of seeing. There's a huge amount of innovation still to be had. So I guess taking a little bit of a deeper dive into free markets users itself. So what sort of demand are you seeing from your merchants around DLT payments, and why have you decided to explore stablecoin specifically?
Sure. So as I mentioned, Free Market offers B2B solutions to our customers, and as the world progressing towards the DLT and the blockchain, there is a huge demand by our existing customers, where they are asking for new ways or new methods of moving funds, and of course nothing better than DLT at this moment, because it will not only help them reduce the cost but also improve the efficiency to a huge extent. Okay, and again, as I said, that they can enter into a new market, reach out to new customers. So that is the main demand from our existing customers. Why we have decided, again, this is the main reason, because our existing customers are asking, and coming back to us saying that why can't you offer us that particular solution. And when we look at it, free market, we would also like to be like a one stop shop solution for our customers. We offer fiat solution, and we want to see that if we can offer a DLT solution as well, which a customer doesn't have to go to anywhere else, and they can just use free market for all their cross-border payment requirement. And why stablecoin? Because of course the less volatility, it is pegged against the major currencies, which is something which we are looking at. It is also one of our requirement from our customers. And again, we want to provide one of the best services to our existing customers, giving them new ways and new methods of moving funds across.
I think that's a really good point as well. Like if your customers are asking for it, it's then definitely something that you want to offer. It's not something that you'd want to steer away from. So I guess that kind of brings me to my third question. So what goes into your decision when you're kind of deciding to partner or to build something like this yourselves?
Yeah, good question again. See, we are a payments institution. We are into fiat space. What we do, we would like to be in this space. And as the world is progressing, everybody is looking at a collaboration as the way forward. And rather than reinventing a wheel with reference to a licensing, technology, huge investment, and also the time which takes to build everything, we feel the best way is and a quick win to offer a solution to our customer is using companies, let's say in your case, let's say BVNK. You guys have a fantastic technology, you have fantastic regulatory approvals in place. So why don't we utilize that? So that is something which we are trying to leverage, and that is the way forward from our strategy point of view.
It's great to hear. That's very kind words as well about BVNK, echoed back to yourself at Freemarket. And how will it benefit customers? What challenges do you see it really solving?
It's from a challenging perspective. Challenges are whatever the challenges are there in the market, which requires a fast and efficient way of transferring funds. We'll be able to nail or probably uh, resolve that particular problem for our customers. We can offer an additional rail. We offer the fiat methods where customer transfer the funds with. We would like to offer this as an additional method or additional rail.
Mm-hmm.
What we are trying to offer to our customers, or what we are exploring, is that we would like to offer our customers to not only accept stablecoin as a receipt or collect in stablecoin from their parties, and also convert that into fiat as and when they want it. At the same time, buy stablecoin using our own proprietary platform and pay out in stablecoin as and when required. So this is the this is the product which we are exploring at Free Market.
Perfect. And that's very much, I think, our thoughts as well. Like we just see it as an added currency to the already coverage that someone like yourselves have. It's not something that will eliminate fiat, but it's just an add-on to as well that you have to date.
Yeah.
Perfect.
And
sorry.
sorry, and one more point which I actually missed to mention here. The reason we want to go into this particular space is so that our existing customer doesn't have to go out and look for any additional partner for those rails. We want to offer everything at Free Market so that our customer is taken care, and they are taken care as far as their cross-border payments requirements.
Exactly, increasing that stickiness, I guess, as well, that they're staying within the free market ecosystem.
Correct.
Perfect. And then just finally, so can you talk us through what this will likely look like from your customer's perspective, and how will they interact with the service?
Uh, it will be an great additional capability to our existing customer. And again, as I mentioned before, it will be like a one-stop solution for our customers, because using our proprietary platform, which they will be leverage this particular product as well, like they are using currently for their fiat requirement, they will use the same platform, same logins for their stablecoin requirements as well. So this will solve both the problems, and within one login, they'll be able to do everything.
Perfect. Well, thank you very much. I'm really looking forward to seeing the introduction of stablecoin into the free market ecosystem. So
Thank
now
you.
I would like to also invite Charles and Bernie to join us. Charles, Bernie, great. That was technology is definitely playing in our favor today. So would you both like to introduce yourselves?
Charles, you want to go first?
Sure, thanks, Fanny. Okay. Hi, everyone. I'm a crypto digital assets lawyer in an international law firm, and I sit in a team of specialists who do the same thing as me. And I think I'm here today for two reasons. So one is I worked on some of the deals that Jane referenced in her intro. So in the early days, we're now in a more maturing environment. And one of the busiest things that I do now is partnerships. So I guess I'm proof of that point that both Jane and Nirav were making about people working together.
Oh, awesome. Yeah, I'm Bernie. I'm part of the product team here at BVNK, and I'm in payments only for 10 years. So Nirav, I definitely have to pick your brain on how that was before. But just in the last 10 years, there wasn't a tremendous amount of change. And now in the last few years, even more. And I'm excited to see what's next. And 15 years in product and technology. And I'm happy to be on the stage with all of you.
Perfect. Well, thanks so much, guys. Great to have you. So Nirav already kind of touched around the opportunity for stablecoins within fintechs, but I'd love to get your guys' take on it and what you feel the main opportunity is.
Yeah, at the risk of maybe of beating a dead horse or repeating the advantages that both of you already mentioned, but I think it's still not overstated enough. The really 24/7, all year round, weekend, public holiday, cutoff times, all of this doesn't matter anymore. It's completely gone. Stablecoins of blockchain really liberates the flow of funds here completely. And we are actually working with quite a few B2B remittance companies. Like actually in Nirav, I think you will soon explore yourself, and they frequently run into issues or have challenges to overcome when it comes to cross-border settlements, especially when there are holidays or extended periods of holidays and weekends involved, and they need to extensively pre-fund or have some costly prediction running there, then send the funds 2 to 5 days to Australia. And then even then, if there's unusual behavior in their customers, whether these are businesses or individuals, then suddenly they are there without liquidity. And the customers that we partner with, they actually have now a tool that they can instantly on a Sunday afternoon, even though there's a bank holiday on Monday, they can actually move the liquidity from Europe to Australia.
Yeah, well, I think the same. So this is ultimately a digitalization, and the more online we are as people and businesses, the more money has to be digital. So that's why this fits in, as Bernie is saying, with the current environment. That's the commercial headline. I think I'd add in maybe two other headlines. One technical. We've touched on digital money being programmable. So the implications of that, I think we are yet to see. A lot of the conversation is often about the efficiencies in doing what we currently do with the benefits of digital rails. So Bernie set them out. I don't need to say it again. But with programmable digital money, we have the opportunity for people to create new products. So new ways of doing business, new products. And I think we're only scratching the surface of what that looks like. The imagination of fintechs is going to take us into that next world. And from the regulatory perspective, the regulators are by and large in favor of this. It's better for customers for the reasons that people have set out, and that is ultimately what regulators are trying to get to. And it's easier to regulate because it is entirely transparent. And we know this from the UK regulators and stakeholders. The FCA via Sheldon Mills is on record as saying that stablecoins can make payments faster and cheaper. And the Bank of England through Sarah Breeden saying that they can enhance digital retail payments. So neither of them are saying that this is a kind of open position for firms to come into, but they are indicating much more than they used to, that the regulators are supportive of this in the general sense.
Perfect. Thank you, Charles. No, I think that's some really good highlights there as well, really adding on from what we've all echoed around the settlement side of things. I think once regulation is involved, it definitely makes it far more acceptable within the market as well. So Nirav, I might actually come back to yourself. So thinking about building the business case for this, how did you create internal alignment to come up with a solution?
Oh, the genesis of this initiative actually was rooted in our commitment to, meeting our customers' evolving need. As I always said, that this particular discussion of that whether we should explore into stablecoin started with the demand from our existing customers. Again, we also would like to be ahead in the race when it comes to, offering innovative and also the new payment methods in our space. And as and when we started engaging during this course of the journey, when we started engaging with companies like BVNK, which has actually helped us getting a valuable insights into industry, the trend, the what is the potential overall, and how the competitive landscapes around this particular space. So what we did, we consolidated everything. We articulated the rationale behind the overall solutions, and presenting along with the potential and benefits to our leadership team on to decide on how we would like to move forward in this particular journey.
Perfect. I guess that's a good question for yourself, Brittany. So what are some of the key things that someone like Freemarket should think about when they're designing a stablecoin wallet for their users?
Yeah, actually, I think Nirav hit the nail already on the head. That that's also the way we think about it. We want to actually that it fits seamlessly into the offering that our customers already have. It's basically another account with another balance, and then maybe the currency symbol or the currency is a bit different, and then it just fits seamlessly into the experience. People can send, receive, exchange, and yeah, we really want to abstract all the complexities from that and offer that then to our customers, who can offer to their customers, and so on. And yeah, another thing that is always top of mind for us as well is actually how can we integrate seamlessly into the platforms of our customers? How can we make the integration easy, and yeah, that it feels like it's a natural extension of the platform and not there's a lot of friction going on there. And of course, we solved it a lot with APIs. And another interesting point that we kind of realizing recently is that there's a lot of operational processes that are not necessarily happening 1,000 times an hour. So you don't really need a powerful API solution for that, but there are manual processes, maybe more treasury movements. So we also offer like a kind of a back office, or we call it a portal interface for the operational staff, so that they can integrate it easily into their more manual processes. So yeah, keep it simple and keep it natural.
All right, I think that's I guess it's like an end-to-end solution for offering it. So as we said, like we can kind of take care of the liquidity management and the compliance and everything that moves on with actually offering something like this to your end users. So I guess that's another good question for someone like yourselves, Charles. So what should someone like Freemarket or another payment institution think about from a compliance and regulation perspective when they're thinking about launching a stablecoin offering to their end users?
Yeah, it's easy to summarize the way regulators look at these things. They're pretty predictable, and they're definitely not trying to hide the rules. Quite the opposite. They promote access to the rules. So if I were to summarize in any jurisdiction, the way regulators look at these type of projects, they're always coming from three headline perspectives. So one is ensuring that there's no facilitation of financial crime. Second, no risk to customer funds. And third, no irresponsible product marketing. So this would be familiar to everybody listening in from any non-stablecoin presentation or conversation. The regulators are consistent and predictable internationally, even if the rules locally have some particular nuances. But they're definitely not trying to make this difficult so far as understanding what's required of firms. And then I think the point that everyone's making in their own way is that that doesn't mean that it's necessary for every party in the ecosystem to have every license and be signed up to every rule. Working with partners and these new fintech partnerships is a natural way of ensuring compliance without having to go from point A to point Z in every product or process.
Understood. And I guess then from your perspective, what would be some of, I guess, the key risks that you would see that they would identify if they were to offer something like this?
That's one for me again.
Yeah.
Yeah. So these are
anyone else
these are the conventional risks. I think it's important to be really clear that here we're distinguishing new payment efficiencies, new systems from unbacked crypto assets. So as Nirav was saying, that the benefits here relate to from the customer perspective, settlement, portfolio balancing, FX management, things like that. So the risk is not of volatility or unsuitable counterparties or things like that. The risks come back to those that are pretty conventional for any fintech. And again, safety in relation to customer funds is number one, top of the list for any regulator who's looking at these things. And we see that play out when things go wrong, whether in crypto or outside crypto. That's the bit that the regulator is most concerned about. And with those other points that I referenced kind of sitting in there as well, ensuring that customers are well informed and dealing with things that are suitable for them. B2B is different to B2C in that case, obviously, and ensuring that the rules are transparently complied with in relation to AML, and ensuring that there's no financial crime.
Understood. And Bernie, what about yourself? Anything from a product risk perspective?
Yeah, actually, Charles mentioned the transparency, and I think that's another understated feature of the blockchain and stablecoin, that we have the complete transparency of a payment and what had happened to the 1 cent of this payment. I don't know, 10, 50,000, maybe 500,000 hops before. And we have companies like Chain Analysis or Elliptic who are actually crunching this data and making it very easily consumable for our risk and compliance teams, and then flag all of these risks. And Charles, I'm curious about your prediction, but my prediction would be that actually KYB and KYC will become less and less important, and KYT, so know your transaction versus know your customer, know your business, will actually become more and more important. KYB and KYC will not go away, but maybe we can reduce some of that like tedious process that we built around it or had to build around it. Maybe we can tone that down a little bit and use now the technology that comes with the blockchain to make it a bit more user-friendly.
I do agree, of course. So identity will become digital too. That this is part of a process of digitalization across the financial markets and our financial lives, for sure.
Oh, I'm not sure I would agree with identity. I hope not.
And then, Nirav, I'd like to come back to you before maybe Bernie and Charles get themselves into a little tiff. Do you think that launching a stablecoin product has any impact on the relationship that you obviously hold with tier 2 and tier 3 banks today?
Being the head of banking relationship, this is the first question came in my mind when we started talking about this particular proposition. As I mentioned before as well, that stablecoin is something which we are trying to build as an addition to our core offering to our customers. In fact, this is again, as I said, this particular point came up because of our existing customers' demand. And we are expecting, if we start going into that space and we offer this product, we're going to experience a huge surge and huge inflows, or probably increase into our volumes. And this will actually help us with our existing banking providers to process more flows through them, rather than restricting or probably reducing the numbers. Again, as I head of banking, we've been constantly engaging with our existing banking partners. We've already engaged into a dialogues where we have said that we are looking at this particular proposition, and banks are quite open, quite positive about this particular solution. Mainly because when we talk about it, how we would like to implement this, because we would like to implement again with the partnering with a good company who's already have a very strong compliance, strong regulatory presence. So this has actually helped us when we go and speak to the banks. So the answer is no. Actually, in fact, it is. We've always been transparent with our banking partners, and this has actually helped engaging with them more transparently and in a more better way.
I can see both Bernie, Charles, and myself all nodding happily with that answer. So I couldn't ask for a better one there. And then, Charles, I guess, how does the movement of money and DLT interact with governments trying to control inflation and interest rates? Probably one for yourself.
Yeah, I'll take it together with the question that we've got in the chat as well about CBDCs. So, well, I'll take the CBDC one first. So I think they will coexist is the short answer. So we need to say a bit more about that. The slightly longer answer relates to we have public and private solutions for many things. The public solution via CBDCs, I think, will come. So the current statistic is that more than half of global central banks are in some kind of proof of concept or on the way towards it. So this is not an eccentric thing in small jurisdictions. A number of jurisdictions that are relatively small have launched, but others are on the way. It takes time. So in the UK, we're looking at later than 2028. So we've got a long runway for private stablecoins to be developed, and you will not be able to hold your life savings in CBDCs because that is not what they're intended to do. They're intended for transactions, not for people who don't like the credit risk of financial institutions to substitute it for government credit risk. And remember, there are still some governments in the world that own large stakes of retail banks. So they need to protect those. In relation to the interaction, so far as payments are concerned, I think the governments are I think still trying to figure out what it means for them. They won't establish the business models. What they can see is that the combination of firms entering the space runs from the largest global banks to local banks, through every kind of fintech, through tech firms, etc. And they're interested in ensuring that the fact that customers want this, they can access it from a broadly competitive range of providers. So this is what sits behind those comments that I referenced before about you get a broad level of support from policymakers in relation to these things because people want them and they make people's financial lives easier and can have benefits around financial inclusion, social policy, all those things that governments care about. So they don't want to block them.
Perfect. And then I guess to conclude, I'm going to ask you to all predict the future. Nice, easy question. So what do you think stablecoins will play in the future of payments? And do we think the majority of fintechs will look to adopt them as a payment method? Don't know who wants to take the challenge of answering that first.
I can go first. That's no problem at all. As you know that we are looking into this particular offering. Fintechs have always been a forefront of innovations, and whenever we talk about any new innovations or into financial sectors, of course. And when we talk about stablecoin, the two factor comes into my mind, which is speed and accessibility. We spoke about that in length during this particular conversations, and it has definitely a huge potential, and it's going to gain popularity and huge acceptance going forward. That's what I feel. And again, as we talk about the cross-border payments requirement, they can cater to the international customers, international markets in more efficient way. So I feel that's the way forward when it comes to as an additional method of payment which can be offered to our customers by fintech, of course.
I always hear the analogy with the early days of the internet. So if we maybe think how was it to use the internet and maybe in the early 90s, that's maybe we are in the late 90s now in terms of blockchain and stablecoin. And I think back in the 90s, it was very hard for us to predict that we can basically live our lives from the phone and manage everything from a phone. And therefore, it's also very hard to predict what will happen here. But I also have to concur, just by the utility that we know now of this technology, it should take a major share of the global fund movement, of course, together with the fiat rails, and yeah, make it more inclusive, make it faster, make it cheaper, make it more transparent, reduce risk around AML, terrorist financing, and all these things. So yeah, I'm really looking forward to that future.
Good to hear.
Yeah, I think pick up on something I said before. So it's obvious that they make some difficult things easy. Real-time settlement and FX movements has been a hard problem, and this just fixes it. But I'm most curious to see how people build with them. I want to see the new products. Maybe I think about NFT projects that I've done where, particularly through 2021, NFTs were a major theme. So I worked on about 60 NFT projects, and some of them were pretty boring. They were just brand extension, digital collectibles. There wasn't much innovation in that. And some of them were really interesting. So nothing to do with cartoons of animals, but using digital certificates inside financial infrastructure to develop new kinds of products that people found interesting and uses for. So lawyers are not imaginative people, so don't ask me to predict what people are going to build, but I'm fascinated to see it when they do.
Perfect. Thank you both. Really appreciate all of your answers and transparency around what you think the future holds. So I think we have a few questions in the chat, but before I dive into them, we had a few pre-submitted ones, so I'll dive into those first. So we have, are fintech players in close dialogue with the FCA? Are there committees, panels, working groups, so that transparency about usage and benefits? Charles, maybe one for you.
Yeah, we can probably share some material after the event as well. So start with trade bodies. The UK has got buy side and sell side. Sorry, this is a bit UK specific, but we can reference others too. So we have UK Finance, which represents financial institutions, and we have the Investment Association representing the fund and asset management industry. Both have been working hard on this because of member requests, and both have materials that we can share in the link. So if you sign up to briefings, there's lots of education. There are free materials to download from UK Finance around tokenization more generally. I did a report for them about 5 months ago on NFTs in finance, digital certificates, not cartoons. The Investment Association only last week produced a paper supported by the FCA and HM Treasury on tokenization of funds. That's a more complex topic, I think, than even we're covering today in some ways, but it demonstrates the support from stakeholders across the industry. And there are lots of free materials, and obviously BVNK produces those too, and I'm sure we can share those with people who are interested in listening in.
Absolutely. Thank you, Charles. And maybe this one's for yourself, Bernie. So how does the fintech industry assure the end-to-end payment users that the scammers are being eliminated?
Yes, that's the reputation that the crypto industry got. Unfortunately, that will be hard to shake off. But I just mentioned chain analysis or elliptic. And it's actually these scammers, they cannot hide anymore. And they were only able to hide because we didn't have the technology yet to really consume and process the intelligence that we can see on the blockchain. All these payments, where they go, which wallets they touched, which exchanges they touch, which businesses they touch. This takes milliseconds to discover, and actually these systems warn us immediately and say there's a scam involved, and therefore the scammers can actually not check out anymore. Maybe they can force somebody to send them some crypto, either with an extortion scheme or just scamming you into an investment opportunity. But now, as soon as they are flagged in the ecosystem, they can't go anywhere with these funds anymore. So I think this problem now will go completely away in the next few years, and I think they're gonna go back to the old methods. I think technology solved that for us.
I like that prediction. And can stablecoin on public blockchains disrupt private international payment networks? As an example, SWIFT, by bridging the 60 instant domestic payment schemes together?
I think if we don't formulate it as a question, I really love it as a vision. That we have really a lot of instant payment schemes around the world, PIX in Brazil, UPI in India, faster payments, SEPA instant. And if the blockchain and stablecoin can play a role here, that would be simply amazing. And it kind of also makes sense because it's a standard. It's the same for everyone. Everyone can participate. And I also think fintechs will play a role here on both sides of the blockchain and try to connect these systems. And I think we actually see this already happening in our customer base. And I really like this vision, and maybe not disrupt, but augment, support, improve. So yeah, that it will coexist together.
Exactly. And then the final of the pre-submitted questions was around the big banks, Santander, JP Morgan, are now fully embracing digital assets. Should fintech players be concerned about being squeezed out? So I don't mind adding my 2 cents on this one, and then happy to pass it over to you guys. So I think we've definitely seen, I think it's positive actually that the big banks are dipping their toe in and kind of utilizing the benefits. However, we do have to take into account, I don't think it's about being squeezed out per se. Banks can be quite slow in their movement. I think it's just further innovation and further ways to partner. We've seen a lot of big banks partnering with fintechs today to offer stablecoin or wallets and functionality. So I don't think it's actually about being squeezed out, and just because they are starting that journey earlier, it's more just about further collaboration between the two, which we've already seen. I don't know if any of you guys have your own thoughts on that as well.
Yeah, I echo your point. Fintechs are the way that banks will be able to deliver these solutions to customers because of the cultural combination. I think the best answer to that question is often given by Simon Taylor via Fintech Brain Food. So if anyone who's watching isn't subscribing to Fintech Brain Food, sign up to that. And maybe 2 or 3 weeks ago, his Sunday newsletter referenced fintech bank partnerships, and he sets out all the reasons why they work. And you can email him and ask him questions if you like, although not at the moment because he's on paternity leave for a couple of weeks. But he responds to emails.
His inbox will be flooding out, Charles, and he'll be contacting you. Cool. So that was all of the pre-submitted questions. So I did say at the start, and I'm true to my word, that you would all have your chance to ask your own. So we have here, what is the long-term case for stablecoin if major world jurisdictions, for example, US, UK, EU, interested CBDCs?
So that was the one I had a go at. So
sorry.
Maybe Bernie, have you got something to add on that one?
Yeah, actually, I think it's in the end a classical competition. If CBDCs take a long time, I think by that time the adoption of other stablecoins and blockchains will have matured quite a bit. I'm actually really curious to see how the PayPal stablecoin, how that will be adopted. USDC, USDT, they are all growing. So maybe if they come too late, then they will have a hard time convincing people and businesses to switch. So curious one. So long term, for now, I see they're moving too slow. They need to move a bit faster. And then I think we would love, as a fintech, we would love to have a CBDC live and work with them.
And the central bank's job is to provide basic services. So all of that innovation that I'm looking to see won't come from the central banks. It will be people building on public and private systems.
Right. And then we have another question here. Can any currency be available in stablecoins?
Technically, absolutely. It's basically you can create your own stablecoin as a contract, as a smart contract on a blockchain. You have to promise everyone, I don't know, if it's 1 Thai baht, you put 1 Thai baht in your bank account so that there's enough liquidity there. But of course, it's very complex to run this. There's lots of material from Paxos out there to how to run a stablecoin, how to prove that the assets are there, how to make the smart protocol, make it secure and safe, then get onboarded in all the exchanges and whatnot. So it is very, very, very hard to do, but technically, it's everybody can do it.
And if you're building your own, then in addition to the regulators that I was describing about a product, you've got the prudential regulators. So in the UK, the PRA are interested in what you're doing if you're getting involved in that, because the potential for systemic risk arises.
And then we have one other question here. So what are the limitations in terms of on and off ramp stablecoins fiat depending on jurisdiction? What about liquidity limitations on non-main fiats?
Yeah, that's a really good one, and I think that challenge has always existed also before blockchain and the stablecoin was around. What about the not so popular fiat currency pairs? And yeah, lots of businesses around the world deal with that problem on a daily basis. And that's also some of where we invest a lot of our resources in, that we have good on and off ramp capabilities, on and off ramp partners, and but it's a challenge for sure.
Thanks, Bernie. And then, how likely is it that businesses will move away from stable coins to coins like Bitcoin?
Sorry, I have an opinion on anything. Oh, really? Bitcoin is, of course, it's not stable. It's volatile, even though with networks like Lightning, where you maybe can send Bitcoins in a few milliseconds and you exchange it also in a few milliseconds. You have to kind of build a lot around these volatile these volatile coins, and therefore I think they will have a hard time competing against stable coins.
Yeah, I maybe just add to that Lightning Network projects are one of the popular projects that we see. So they're getting funded, lots of technical development, but they are still, with apologies to anyone I'm offending by saying this, they're still pretty experimental.
I can also certainly add on this, because as I mentioned before, that this particular discussion started because of our customer demand, especially the businesses, because Freemarket caters to businesses, and the stablecoin is more preferred way of moving funds, mainly because of the less volatility, because it is pegged against the currency, and that's what the businesses are looking at. They're looking at a stable way of, without a high volatility, or probably, where they have to, there are various risks involved into it, if at all there is any fluctuation. So stablecoin is more preferred way, as far as that is something which we are at least getting the information from our existing customers right now.
Perfect. Thank you, Nirav. And a big thank you to Charles and Bernie also for joining. I think that's all we actually have for today. But if anybody else has any other questions they have for myself and Bernie from a BVNK perspective, or Freemarket, or for Charles, obviously do reach out and we'll be more than happy to spend some time with you. But thank you again all for joining us, and I really hope you enjoyed this session.
Thank you so much, everyone.
Okay, bye-bye.